What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig. The Fed rate cut was 50 basis points. What does that mean? What's happened with that in the past? We're going to talk about that. We're also going to talk about what I see for Bitcoin. Could Bitcoin actually get a new all-time high, and what would it be? Or is it done from way back in March? Was it at the all-time high? We're going to take a look at that. Definitely stick around for the whole video, and let's get into it. So don't forget, guys, make sure you smash that thumbs up, leave your comments down below, subscribe to the channel to get daily updates. I'm going to start going over more things than just the charts in the videos. So let's get into it. So let's look at January 3rd, 2001, when the Feds cut rates after raising a bunch, right? What was that at? It was at about 6%. And they did a 50-point base, or a 50-point cut, right? So what happened after that? Let's take a look at it in the chart. That was right here. We're going to zoom in. This is a daily chart of the Dow Jones, right? I like to watch the Dow. So as you can see, that you had the rate hike right here. Same type of candle. If I move that over, we had a little wishy-washy up and down, but it still managed to raise from the low about 7% right here when it topped in the year 2000, right? In January 2000. And that was a 2-year bear market, right? And that dropped 38.7%. Now let's take a look at the next one. So then we had that what that shows to me is the Fed is panicking, in my opinion. Of course, none of this is financial advice. Always do your own research, look into stuff for yourself, and come up with your own results. But as you can see, that was their first rate cut, right? And what happened after that? You had one more high before a long bear market. And then the next one, everything came back to normal. They thought right here back in 2006, they were still raising rates, right? And then their first 50-point deduction, right, was at 4.75% in 2007. Let's look at the chart there and see what happened. Right here, this was when they lowered the rates. Again, you had about a 6% pump that time after the rate hike. Again, I think it's just a panic move by the Fed, or just by design, to end up taking everybody's market or money out of the markets. The biggest money grab in history. I've been talking about this. And this was the housing bubble, right? So this was the housing market crash. This time, we'll talk about it in a minute, but you can see once they started dropping the rates, they kept dropping them harshly, which I think will happen again this time. But I think if we do get another new high, it'll probably be within the next week or two. If you look when they lowered rates here, it was on September 7th, or I'm sorry, September 18th, 2007. And it peaked October 11th, right? So about 2 or 3 weeks, you hit a top, and then it was just misery for the markets after that, right? And everybody up here, just like now, was thinking they were geniuses. The market's just cruising up. It's going to go up forever because they're going to keep pumping the markets, blah, blah, blah. But if you look back here, same thing. Let's see, how long did it take from the January 3rd to January 14th? So that was a little less than 2 weeks. So we could look at it like a 2 to 3 week, and it doesn't even have to take that long. We could see we could see it make another high soon, right? But you can see what happened after that. It pumped 7% in 2007 when they lowered the rates, and then it had a 54% drop to the downside, right? Now let's take a look at where we're at today. So the Feds dropped rates yesterday. You can see after all this pumping, right here. So from 4.75 to 5%, right? Same type thing in the housing market. Obviously, it was lower than in the .com, but it dropped. They dropped it 50 basis points again yesterday. And let's look at where we're at in the Dow Jones right now. And I'm going to show you another thing I'm looking at too. But So if it's done, right? If we're done here, we could continue down. This could be it. But there's a few more points I want to watch here. So if it raised from the bottom here, when they actually dropped the rates, if it raised another 6%, that would get you to approximately, these are three areas I'm going to watch for. So let's put one up here around this 43.9 to 44,000, and then we have this 44,500 that I've had there for an extremely long time. I'll show you why, and we'll take a look at that. If we was to get a massive pump in the next few weeks, that would have to, it would have to really pump to get up there. Let's see how long this one took here, from the 5th of August to, yeah, that took about 3 weeks to get up from, what was that, 38.5 to 42. So it's possible, could get up there, right? Up in this range. But the other area I'm watching for is right where we're at now, pretty much, maybe a little bit higher. It's around this 42.2 range, which would show a rising broadening wedge, right? And we know those are bearish. But if we take a look at the big picture here, it looks like an ending fifth wave diagonal. As you can see, here's an A, B, C, D. This would be E, even if we got up to 45. And the reason I like to show people this is because if what happens is going to be what I think is very possible, which is another Great Depression style crash, because this was an everything bubble. This wasn't just a .com bubble. This wasn't just a housing bubble like the last two I showed you. This is an everything bubble. There's a lot going on. The economy is literally going down in a bad way. Fake news all over, telling you, giving you fake numbers and everything else to explain why the market's going up. Well, my reasoning on why the market's going up, it's just a wick-off distribution. They're getting everybody to put their money into the markets so they can take it out. If you don't know who they is, do some research. So anyways, that's what I'm looking at here. I don't see this thing continuing up for years to come, for sure. A lot of people think it'll hold up till the election. I'm not so sure about that. If you remember, 2008 was an election year. It did not continue up to the election. So just be careful out there, guys, with that. And let's take a look at what it would look like. Again, this could go up to 44.5. And I drew this in here months and months and months ago. I didn't think it would get up to this point, but I did give you that idea, right? But this is why I say biggest money grab in history, because all these people that are becoming millionaires and because of their stock market money, look how fast all that can disappear. Like, very fast, right? Does it have to go that fast? No, but this could be a huge bear market. Did it recover? Yes. How long did it take? About 40 years just to get back to the highs right here. So you probably don't have enough time in your lifetime to recover if this happens. So just make sure you're making plans, figuring out what to do, where your money's at, what you're doing with it, and be extremely careful. And what would happen to Bitcoin if that happens, right? Bitcoin's a high-risk asset. What things dump the worst in a market crash? High-risk assets, right? So if you guys remember, I drew this back in May. Gave you this short zone, right, of between 69 and 72 range, right? We came up, hit it 3 times so far. Now, I know everybody's thinking that we're going to new all-time highs, which, if the market does do that last pump, we could. And I'll show you the same thing I've been telling you for months, where I think Bitcoin will end up, and it's not 100,000, even if we make a new all-time high. I'll tell you what that is. Again, guys, just real quick, make sure you guys smash that thumbs up. Leave your comments. Let me know what you think. I know when the crypto market, I've been in the market on YouTube for crypto for about 7 years now. So I know when everybody gets real mean and just negative and just, there's just some miserable people out there that want to act like they know it all, right? And when the markets are getting to the top, they get more and more volatile. You'll see that in the comments, I promise. So anyways, let's take a look. And then what happens? You know, it comes down and it comes down hard. Although I did think we were going to make a lower low in the last bear market. which I think this is still the bear market technically, with just a rally and distribution. So anyways, let's take a look at where this might go. So this is what I want to do here in the small time frame. Oh, before I show you guys, if you guys haven't checked it out yet, check out Prime XBT. They do sponsor the channel. Links down below. You can get up to a $7,000 bonus and 20% off your trading fees by using my link. I also give out promo codes every once in a while on Twitter or X. It's just a series of numbers and letters, and you put it into the promo section on there. If you've signed up with my account, it can give you up to it can give you a $200 bonus that you don't even have to make a deposit. You can trade off that 200, and whatever you make, you get to keep. You can trade traditional markets, gold, silver, oil, S&P, Dow Jones, everything from Prime XBT. So you don't have to keep switching exchanges, moving around, and you can trade your Bitcoin. So what I like to do with Bitcoin, I trade with Bitcoin on there, so whatever I'm trading on Prime is against the Bitcoin. And as of right now, I like shorting. We've been shorting all these areas. Comes down, you're making money, and then what I do is I trail my stop losses while it goes. And if I get stopped out, it goes past that, then your Bitcoin goes up. So both ways you're making money, not just one way. So anyways, I can make a video explaining that at some point, but let's take a look at what I'm looking at now. So if this is a ABC right here, where would that get us? We go from the low with your Fibonacci extension, and you go to the high. Oh, what is that? This is not what I put on there. I don't know why that did that, guys. So if we go from this low right here to this high right here with the Fibonacci extension and go to this low here, this would get us up to our 1-to-1 extension would be, and again, guys, I'll show you the bullish case. Just bear with me. No pun intended. That would get us up to approximately right there at our short zone again, about 69.5 before our continuation down. And what would that be? That'd be a series of lower lows, or lower highs and lower lows. We've been seeing this for a while now. Now, let's take a look at one more thing here. Now let's go into this, looking at this as a possible ABC, right? Where you had an ABC for your A, little 5 wave, 3, 5, and then 3, right? Let's take a look at what that would be. That would get us up to, and these are areas I'll be looking for shorts, guys. I know everybody's like, never short Bitcoin, but if you do it like I was saying, you short it, and you're in Bitcoin, right? You're shorting in Bitcoin. You're making money while it goes down. Trail with your stop losses, and when it pops up and stops you out, then your Bitcoin's creating value. You look for another short and just keep doing it. That's done me very well over the years, guys. Very, very well. I do. Like I said, I may make a video on it and show you exactly how to do it, but Prime is the easiest way to do it on the CFD trading, so I would definitely check that out. But anyway, so these are the upside targets if we do continue up from here, although we don't have to, because if we put in the RSI here, we are currently from this high to this high, we're level across right now. So if it does come up here and makes yet closes lower and we get some hidden bearish divergence, then we just turn around here. But bullish case, I know you guys want to see the bullish case, especially bulls out there. Let's get into that. So this was the chart I gave you on the last video, right? I said if we pass the 61.5 range, the possibility of going up to around, well, it went a little after. So your upside target from this move in the most bullish case scenario is 82 to 83,000, right? But what would that be if that's the case? First of all, you got to break this trend line right here in the RSI, right? Which we're teetering on now. So there's a possibility it could be topped here, but if we get above this, come back down for a test on the RSI, chances are we could be heading to these levels. What would that look like in the bigger picture? Those of you that follow the channel know I've been looking at this. Let me pull it up. Wyckoff distribution, right? And that would look something like this, and getting us up to that somewhere in this zone, right? Between 75 and 84,000, right? And that would be the ultimate top for Bitcoin, in my opinion. I do not see 100,000 coming, even if this bullish case was to play out, which it is possible. But I would just be very cautious out there, guys. I know this is not financial advice, but I hear a lot of people saying they got everything in crypto, all their wealth in crypto. That is extremely, extremely dangerous. So just be careful if you're one of those guys, because if the market crashes like I think it's going to crash, crypto is going to go down 85, 95%. That's 85 to 95% of your wealth lost if you stay in there. And I do think it'll be a long recovery if it's like a Great Depression style crash, which is really looking like that's what's coming, guys. So, stick around if you're in it and you're making money on this run, this bull run up with the traditional markets. Congrats, but make sure you at least take profits. That's a smart thing to do, just in case, because I think when this thing makes a turn for the worst, it's going to be quick, it's going to be harsh, and it's going to be painful for a lot of people out there that are just oblivious to how markets can take your money. Biggest money grab in history. I still think it's coming, guys. Be careful out there. Much love. Don't forget, smash the thumbs up, leave your comments, share the video if you would, and I'll see you in the next one.